Welcome to Dig Deep, the mining podcast. In this podcast, we go deep into mining news, hot topics, and live interviews with mining professionals and leading figures in the mining industry. Introducing your host, Rob Tyson, founder and director of Mining International and Mining International Executive, a leading global mining recruitment and headhunting agency.
Hi, mining community. Welcome back to another episode of the Dig Deep, the mining podcast. And today's guest is Tim Clark, who's the CEO and director of Fury Gold Mines, a Canadian-focused high-grade gold exploration company, strategic position in two prolific mining regions in Quebec and Nunavut in northern and eastern Canada. Tim is a senior executive with extensive experience in capital markets, working for the likes of Barclays Capital and BMO. He's helped the transition of Fury Gold's strategy to move from a hybrid development company into a dedicated high-grade gold exploration company focused on working with several of the largest gold producers globally. Today's on the podcast. He's going to share his journey and his journey with obviously Fury Gold, talk about their exploration program and how they're helping the local communities with some of their initiatives. Tim, welcome to the podcast. How are you doing?
Hey, Rob. Great to be here.
Yeah, thank you for your time. As we always start these podcasts off, I just wondered if you could just tell us a little bit about your background, your career. As I mentioned, you've been in the capital markets for a period of time. So I just wondered if you could just run us through your career from when you probably graduated through to sort of present day.
Sure. Well, I graduated from, I think it really starts in capital markets when I got out of business school. I went to University of Vanderbilt, and then I headed right to New York. And I started with a company called Deutsche Bank and got really sort of involved with healthcare and sort of tech right away. And but I ended up moving up to Merrill Lynch in Boston, and within a couple of years, which is where I'm from, where my family's from. My grandfather started a company called H.C. Wainwright, which is a brokerage firm, and so a lot of my aunts and uncles and cousins all worked there. But I went to Merrill Lynch, and it was great. It was a big platform. It was a great place to learn because you had so many senior people on the desk. It was very deep, and I ended up sort of switching out of sort of covering tech and healthcare to Canada. And I very quickly learned it was a resource-driven country in terms of getting people to invest. And I got dialed in with a guy named Mike Jalonen, who is probably one of the top gold analysts in the space. And he sort of took a lot of the younger guys and mentored them, and I was one of them. And I worked with another guy named Charlie O'Coin, who covered Fidelity for over 50 years. He was one of the top sales guys there, and I was his right-hand man for the next decade. And from there, I went out and I left Merrill Lynch to join him over at a company called National Bank of Canada. And this was when I started getting back into sort of the Canadian stuff with the Canadian group. But quickly, I ended up over at Barclays. And they asked me to build a desk for them with a couple other guys and start a Canadian business. And so I called upon a lot of accounts all over, not only the United States, but also Canada. And this is where we ended up spending a lot of time down at the Indaba Mining Conference, which we were just talking about before this call. And so a couple of my friends and I started the conference for Barclays down there that led to, I think it was about 100 companies by the time they got through with it. But I left shortly after about 5 years, and I went over to BMO, which was the preeminent banking company for mining in the world. So just to set the table, Merrill Lynch was fabulous for a lot of reasons. I thought Barclays probably had the best commodity platform by far of any company I've worked on. It's world class. They had individual analysts just to cover gold. silver, copper, and they really were global. And then I went back to this small little boutique kind of scenario with Bank of Montreal, which was really North American driven, but it was much more driven on the smaller and mid cap names. They like to do the big caps, but I think they really sort of the bread and butter was much more banking driven in the small mid caps, and so I got to go experience a little bit about everything, sitting on a big platform with big major conferences. I think back about Merrill Lynch, they had the number one mining conference in the world with nothing but CEOs. And in 2000, I went over to that conference in Dublin. I was the only sales guy along with the Australian guy, and there was nobody else. Within a year, 20% of the conference was from Boston alone. And so while I was sort of worth mentioning is I got lucky because Boston was the big mutual fund hub. And so the accounts I covered were world class. Fidelity, everybody kind of knows about that, but I'm not sure everybody knows that Wellington had the largest hedge fund in commodities and natural resources in the world. And you had other companies like Putnam and Mass Financial and other huge funds there. And so I got to be in front of all these top CEOs, from Newmont to Barrick to Kinross to Goldcorp, and a lot of it was really sort of leaned into the gold side because that was more transactional for a lot of people. But because of that, when I left the industry about 4 years ago, I ended up getting some phone calls to help raise money for some of these companies. I actually took a job at Largo Resources, which was a $1 billion vanadium company looking into develop vanadium batteries, cutting edge sort of stuff. But I also got offered a board seat on Fury Gold, and that was about 4 years ago. A friend of mine was the CEO, and he had worked with a company called Agnico Eagle, and which is now the largest gold mining company in Canada and second largest gold company in North America. And anyway, he asked me to join him, but about 6 months in, he decided to do something else. And so they looked around the room and said, we need a guy to take the company and kind of reorganize it, raise some more money. And they all pointed at me. And that was about 3.5 years ago. When I took the company over, I have to say, one of the things about the junior market is that there's a lot of risk because the first problem is financing. These companies don't make revenue. They literally explore with drills. People think that they produce and have a revenue and they sell gold. What we do is go out and discover gold, and then we bring in the bigger companies to come actually produce it. The risk is you get out there and you run out of money. The reward is if you find something, this is the part of the market you can make the most money and the most upside. And this is why a lot of people like to focus on the juniors is you can make fortunes if you catch the right junior. And if you want to buy gold and gold goes up 20%, that's a pretty good return. And that would be about the same for a large cap gold company. But if a junior, you find some success, it can go up 500 to 1,000%. And that's what a lot of people have come into the industry looking for. There's been a drought for about 10 years that these companies have kind of bounced around the bottom. They've been waiting for gold price to go up. Gold price is going up. But the juniors haven't moved as much right now since this kind of upside of gold price. They lag, and typically, historically, they lag about 18 months to 2 years behind the majors top ticking. And what it means is you got to give the majors a chance to take that free cash flow, the billions of new dollars they're getting, and deploy it. And the way they deploy it is they're not going to give it back to as much in dividends. They might give you some dividends, and they might do some cash buybacks, but typically they go out and buy assets, and they have to because these large companies have to replace ounces. And so therefore, you have these companies go buy these junior companies. And so essentially, I felt that the gold was going to rip, and I was right. And I'm just waiting for it to catch up with the companies. In the meantime, we've repositioned Fury to sort of be best in class to capture that if we get a run on the juniors. And that's sort of my laid out long spiel of a career.
I would like to welcome our sponsor, Hawcroft. Founded in 1992, they provide property risk management services to the mining and other industries, using their knowledge, perception, and expertise to offer true foresight across all aspects of mining and infrastructure. Their insurance risks surveys are recognized as the industry standard, as their reports are comprehensive, ensuring underwriters are well informed of risks surrounding your operation and quality control of those risks. Working with some of the biggest mining companies in our industry and across 600 sites, Hawcroft offer insurance risk surveys, construction risk reviews, asset critical and specialty assessments for a variety of mining, processing, smelting, materials handling, power, refining, port and rail operations. So if you're looking for a premium bespoke property risk management and risk engineering service, then contact Hawcroft today or visit their website at www.hawcroft.com. All details are enclosed in the show notes accompanying this episode. That's fine. Before we speak about Fury Gold, you mentioned earlier on in your career you had a couple mentors. How important were they in your journey, in your career to where you are today? What kind of things did you learn from them? Because we get a lot of listeners from various levels, whether they're recent graduates in the mining industry or could be more senior people. And I think having mentors throughout your career is important. And you distinguished you had two early on. What impact did they have on yourself and in developing your career?
Oh, 100%. Look, I think what's interesting is, when I got into New York, they used to say a lot of your career is if you get lucky enough to sit next to a really great senior person that can teach you the ropes and bring you along. And it's not, I think it's less to do with them bringing you along and promoting you as it is teaching you the basic skill sets that you'll use throughout your life. And to be fair and honest, I've been lucky enough to work at some major companies, world-class companies with some world-class people, and I would say, 30 years later, when I walk in a room, I can tell who was trained properly and who wasn't really quickly. You think, like, one of the things my son is 18 and he's heading off to college next year, and I tell him, I said, you've got to find something that you're passionate about, but really what it is getting into where you're good and networking, and networking is how you get your job. But the way you keep your job is you don't go in there and expect to learn everything in the first 6 months. It's years. And I remember, like 25 years into my career, I could say to myself, I'm actually a better salesperson this year than last year. At 26 years out versus 25, you improve all the time as you go through. And I think about Charlie O'Coin, who was the senior sales guy. What I think he taught me was, you got to be patient. And you got to add value. You figure out a way. Everybody can find value. You can't just go out and take people out and assume they're going to do business with you. You got to add value at the same time. But it was, there's a lot of ways to take shortcuts for a quick buck, but there's no substitute for experience. And I think that if I didn't have those mentors, I don't think I'd be here today. And we could talk about that for an entire podcast. I have my own opinion about how people conduct themselves at work. And I really was surprised when I came into the junior space, what it was like. And I went back to one of my big accounts, big investors who was institutional, and they asked me, they said, "What's it like? I've heard, but I want to know." And and they said, what was it? They asked me, is it kind of like you're the only adult in the room? And I would have to say 100%. And it's not that people aren't smart; they just weren't taught how to manage people mostly.
Mm. Um, we can. You mentioned obviously doing another podcast. We can certainly do another podcast around that kind of subject. So I will hold you to that. Um, so why don't you just tell us an overview of Fury Gold Mines?
Sure. So when I first looked at Fury, what I liked was typically you see a junior company with one asset. And that's very binary. You either find gold or you don't, and it's gone. And that's a very binary event. And what I liked is we had three assets actually, and and what I liked was it was also in Canada. And typically when I used to bring on the capital market side a company in to see a big investor, first question out of their mouth every time was, "Where are you located?" And that's basically the question is, what's your risk? What's your geopolitical risk? What's your country risk? And being in Canada and Australia are probably the two best places in the world. I would say Quebec is almost even better because of the government subsidies and the cost of doing business. So one of the things that ways do we raise money in Canada was we use what's called flow through charity, and the government enables us to for every dollar we raise we can effectively tax credit wise raise $1.75 $1.80. Huge advantage in mining. So if Fury were to buy an asset down in Latin America, we would be doing it in US dollars, and Canada is a fraction of that at around 70 cents on the dollar. Plus, we get the flow through. So we get to put like twice as much money in the ground. And that's a huge advantage. And they also help fast track a lot of the permits and things like that. So that to me was a big plus. And when I actually went, before I took the job, um, I always remember what I was taught, and what you do is you go to your top investors and you ask permission, and it does two things. One is it's a check that you're not being kind of an idiot and not thinking about something, but also the once if they say yes, then they are going to back you, and so that's what I did. So I went to Fidelity and I went to Agnico Eagle, Sean Boyd at Fidelity. At Agnico Eagle and Steve Calhoun at Fidelity. And these are really great friends of mine and my best sort of clients that I had over 20 years. And I said, "What do you guys think?" And they both said, "We like it. We think it's a great idea." And I said, "Look, right now Fury is financially challenged. They're running out of money. But I think we can sell this asset that was up for sale before and it didn't go through, but I think I can get it through. If I can sell it, refinance the company, would you come in and back me on the rest?" And that's exactly what happened. So once I took over, we put the process in to sell an asset called Homestake Ridge out in British Columbia, and we sold that to Dolly Varden. And we ended up taking 45 million in equity and 5 million in cash of Dolly Varden silver. So when investors are looking at Fury, um, we're probably the best financed junior exploration name, period, because we own 51 million shares of Dolly Varden, and that gives us a nice cachet, and it's extremely helpful to us when we go out and actually raise money. Raising money is the biggest trick for these juniors. It's not just what you raise, but how you do it. And I'll give you an example. We did our first raise. I think it was around 8.5 million of flow through money, and the brokers wanted a 15% discount and a full warrant. And in the end, I said, we don't have to do that. Well, if you guys um, don't like, well, I basically told them I didn't like the deal and I wanted a better deal because I got $50 million of someone else's stock to sell if I had to. And you're not desperate. You're not kind of backed up against the wall. So we ended up doing the deal for 7% discount and no warrant. I mean, so Fury has no warrants right now. I think we're one of the few juniors that have no warrants. And investors should understand that when you give out warrants, the company gives out their upside. And then at the same time, because we've had the dolly, we've been able to sell down little bits and pieces of it, and as anybody in any portfolio would do, as dolly went up in price, we clipped coupons, and so we've pulled out about $20 million over the last 3 years of Dolly Varden, and we still have more in equity than when we started 3 years ago. So Dolly, for those of you don't know it, is probably one of the top 5 silver takeout stories in the sector. When we put those two pieces together 3 years ago, Hecla. I knew Phil Baker, who was the CEO of Hecla at the time, and he said, "Tim, if you're going on the board, and I got a couple other guys on the board." He goes, I can deal with this. We'll take 5%. And then they went to 10% and they went to 15% of the company. And if you look at a map, the Dolly Varden property is surrounded by Hecla. And Hecla has made their career of acquisitions and getting bigger. And one of the sort of the pushes into investing these days is getting into bigger and bigger indexes. It's all about index investing and flows, and Hecla wanted to get into the S&P 500 and needed to get bigger. And so the chances of them coming into Dolly were pretty good. Now, Phil left Hecla last summer, and they've got a new CEO who's moved over from Barrick. I have not sat down with him yet, hopefully soon. But I would assume that he would have a similar view in the market. And again, there's just not that many silver discoveries at all. And that's why, you see as an investor, the silvers pop quicker because it's just fewer spots. In fact, most silver companies are predominantly gold in disguise. But they're on to a real silver discovery. I'm on the board of the company, and they've got $32 million already aligned to drill next summer, which is a lot. And I think everybody's waiting to see what's going to happen because, as one investor said to me, it says, I don't think it's a question when, it's just, or if, it's just when. And I don't know if that's true, but because you never know. But I feel very good about our position at Dolly Varden. And typically, if a company gets bought out, the average takeout premium is like 50-60%. That's the average. It could be bigger, it could be smaller, but the average, that's a lot more upside for that Dolly Varden play. And it makes up our market cap about 75%. So our market cap's around 85 million Canadian. We've got the Dolly Varden piece, which makes up, I think, around 55 million today. And that's only because the stock's backed off in front of the holidays with tax loss selling, in my view, and it'll probably go back up, is my hope, as they start marketing into the season. And then what we've got is 1.89 million ounces of gold in James Bay in a place called the Eau Claire Resource. And we've got another 1.3 million ounces up at Committee Bay, which is up near Agnico Eagle's Meadowbank resource. So it's about 150 kilometers northeast. And we've got also acquired the joint venture that sat between our property in Quebec and Newmont's Éléonore mine. It was a joint venture between Newmont, Azimuth, and ourselves. We bought them both out, and now Newmont sold the Éléonore mine and to a Indonesian group that's coming in, and they haven't closed it yet. But there is my sense is there should be some consolidation. One of the things that I think that investors should also understand, like as gold price goes up and inflation goes up, these companies need to get bigger to protect themselves from inflation. It's cheaper to have a big swath of property where you build one mine or one mill and one road, not five. And so our properties happen to sit next to some big mines, which is the Éléonore mine, Agnico's Meadowbank mine, and then also Hecla's big property out in British Columbia. So from an acquisition position, we're in a good spot, and we have money, and so that's fury in my view.
Yeah. You're going to be starting a drill program at Éléonore South at the beginning of February, and your technical team has identified obviously large-scale gold, and normally in a similar geophysical and structure setting to that of the nearby Éléonore mine. Just wondering if you just discuss the potential target or opportunity that may have for you.
Well, Rob, you're doing great, because these are probably the best questions I could get. Is this Éléonore mine is the third largest mine in production in Canada. It was built by Goldcorp. It's got a mill that was overbuilt, in fact. And then Newmont owned it, and recently have sold some properties to pay off their Newcrest acquisition. And when about a year and a half ago, we kind of got a good heads up that they were going to do this. And so we waited quietly, and we ended up buying out their side of the joint venture. We both bought out Azimuth a couple years ago. It basically, when you have a property with three owners, it's kind of like owning a boat with your two buddies. Nothing gets paid for or done, right? And that's what happened for like a decade. So nothing really got done. We were the operators, and we wanted to go out there, but they would never put up any money. And so my guys, my geologists, when I got here, I asked them, I go, where's the best, most prospective area to drill? And they said, it's on this property. And I said, well, how can that be when it was owned by all these guys for so long? And one of the guys used to work at Goldcorp, and he said his job over there, this was our manager in all of Quebec, and he said, look, my job over there for 5 years was to find a new discovery on the Newmont property similar to the Éléonore mine, and we never could find it. And he goes, and I came over here and I see some of this geochem grid, and he goes, oh my God, I think it's over here. And it's amazing. It's on the western side of that property, which is 14,000 hectares. It's not that big, but the anomaly not only has the same gold background and geochem, but it's got the scale and size of the Éléonore mine, and no one's ever drilled it. And you can see the golden till anomaly, everything that the markers that we want to see are there. And the gold background is even higher than some of our new discoveries 50 kilometers south that we've actually converted into real ounces. And so it's in a little bit of a bog, so that was part of the problem. And we went last summer, and we actually did a full grid program, because you need those to target, otherwise you're just blindly shooting in the dark. And we got it back this fall. We raised $2.5 million or $5 million last year. We saved 2.5 of it to go after this section. And all my crew are literally just got into camp about 2 or 3 days ago in snowmobiles and opened up the winter camp. And they should be drilling by February 3rd. And we're going to put 15 drill holes across a 3-kilometer strike zone. And then, my guess is we'll probably have to do it again. These things you have to stage in. And, when you're at a big property like that, when 3 kilometers by 2 kilometers, 15 drill holes sounds like a lot until you get to 3 kilometers of drilling. And, but the interesting part is if we happen to hit something here, the Éléonore mine or mill is running at like half capacity. And I suspect after Newmont leaves, they're going to be needing a lot of ounces. And so if you're buying this Éléonore mine, and they paid 800 million for it, and it had about 5 to 7 year mine life, that's it. They got to do a lot more drilling. It's going to be a lot deeper, and if we had a big discovery next door, that could, you know, all intents and purposes, double the value of that property overnight. So it would represent a lot of upside for the group that bought it, Del Mar, and like I said, we're starting to drill, and we should have results out by PDAC.
Um, Obviously, you've just given us a little bit of insight as to obviously the Éléonore mine, which obviously has been recently purchased by Delmore. I just want to just, is there anything else? Obviously, you've spoken about the region and other companies that are involved. Is there anything else that you would like to add and I suppose give us more of an insight as to the region where your assets are?
Well, I think the region where we are is relatively unexplored in Quebec. Like I said, the government is extremely supportive of the drilling program. More importantly, what we have is on the Eau Claire resource itself. It was a mine that was basically a lifestyle company. The owners, I don't think, from my geologist point of view, did a lot to get it bigger or whatnot. Last spring, we took 3 years worth of drilling and updated the resource, added 40% to it. We also increased the continuity between the veining system. We also scoped it and found that the veins were at a steeper angle, and that makes it more economic to actually get it out because you can use automation more easily. And the best part about that resource is it's on the road. And I wish I could, I'm so used to not talking about it because I have a photos I typically show, but when you drive, you fly into a good airport that's up to date. And you drive 45 minutes on a highway dirt road that you can drive an 18-wheeler down. You pull up on this spillway. That's this massive electrical spillway for the James Bay project. And for those who aren't from that area, the James Bay Hydro Project is one of the largest in the world and supplies electricity to all of Quebec and most of New England in the United States. It's enormous. And we have power lines and road systems up there that no one else has. So I brought in my new chairman. His name is Brian Christie. He had 40 years as a geologist and an analyst and a banker, and he spent the last 10 years working at Agnico for Sean Boyd. And he came up and he was snapping pictures left and right. He couldn't believe it because he worked at one of the largest gold companies in the world, and he says, our exploration properties have nothing like this. And what people forget is it's all about margins. Everybody gets excited for a big drill hole in the middle of a glacier, mountain. And what they don't realize, it could cost billions to get it out. But if you have a decent mine, we actually have probably one of the better high grade mines in the area. We've got 1.9 million ounces and around 6.5 grams of gold, and that's very high grade. So we're interesting now that we've kind of put this all together. One of the things we had to do was go out and re-educate the producers because the producers forget about these guys, And basically what we did was we found a great house in the neighborhood with good bones that was beat up, mistreated, misaligned, and we did everything to clean it up. And now we have one of the better houses in the neighborhood. And the valuations of the houses are, all flat across the whole sector. Whether you're a good company or a bad company, you're getting the same valuation. But when the market turns, you want to be in a name like ours because, I'll go ahead and tout a couple things that I like that you might not ask me about Fury. And I would tell you, it is a huge advantage to have someone like myself from capital markets. The way you make money in this is you can raise money at a good price. You don't get scalped in terms of pricing. Number two is you don't spend. A lot of companies get too excited about their drilling or they get an ego about how they should spend and build their offices out. And, I work from home on my laptop. Everybody in my company is. We got rid of our offices. There's nobody who takes business class seats. I mean, I've been flying business class my entire career at these other companies, but we don't do that here because it's our friends' money. I got my stepfather in here. He bought 3 million shares. I got my mother in this company. I got all my best relationships, including, my two best that I got in originally. And so, the idea here is to make a clean, straight up, honest junior company with good assets and leverage to the gold price. And I think that that's not typical. And when I go into, say, New York and sit down with these high-end retail brokers, to be honest, I'm out of there in about 15 minutes. They say, okay, you're a capital markets guy. You got, X and Y and Z investors in this company, which are two of the top three producers in the world, and Fidelity. And you got $50 million of someone else's stock. And you're not greenfields. You actually have ounces in the ground that should be able to track a value. And typically they're like, oh, that's all I need to know. Because, by the way, we're listed on the New York Stock Exchange. There's probably a handful of companies in Canada that do this that are on the New York Stock Exchange. And we inherited this. It's an expense, but 2/3 of our investors are US. And when the market comes in, it's all going to accelerate our share price faster than if you were just a Canadian name. And so again, the way you make money in this business is you time it when the flows go into the sector. You get lucky in terms of your drilling. You find a bonanza discovery, or you become very transactional and you buy and sell things. We've done 4 transactions in 3 years, and we're going to do more. But if you're smart with the way it's like a poker hand. This is one of the bankers said to me. Everybody gets dealt a poker hand, but who's better at playing their cards? And if you're a geologist running your company, the chances of you being actually transactional are probably lower than if you're a institutional capital markets guy who knows everybody. It's just easier. And so I think from that reason, we can overpunch our relationships with the majors. We overpunch our relationships with, if we can get up to a couple hundred million or more, the amount of institutional accounts that Brian and I can pull in would be phenomenal. And again, it's not an accident. I brought in a guy who worked at Agnico for 10 years, right? And Brian went around the world with Sean Boyd and sat down for 10 years with every major buyer of gold in the world. That's what they did. They were phenomenal at it. They got prizes for it. And so if we get a little bit of a lift, if we find something in this Éléonore South with this drill program, or if we can get a couple deals done, or maybe bring in a joint venture partner for Committee Bay or whatnot, I think we're off and running.
Obviously, you got a capital markets background. How do you navigate the challenges of obviously working in the junior mining sector when it comes to sort of project development and financing?
So project development, well, we've got a bunch of projects, and I rely heavily on our senior geologist. Brian Atkinson has worked in 22 different countries around the world, and he's very good at what he does. We have a phenomenal team. We had guys who are ex-Newmont working with us too as well. And so from a project development standpoint, we kind of know what we want to do. When I say that, it is around how do you add value to the company. So what investors have been paying for is new discovery. They don't want you to go back to the resource and fill in some holes. They want you to show them it gets. So the producers, actually, this is producers, they want you to step out and show how big it gets, right? And then if they get an idea how big it gets, they might come in and buy it. And investors, they just want news flow. And in the junior space, there's two types of investors. There's those who just come in to trade and they're in and out. And there are those who come in to invest in the long term because they have a portfolio plan and they're looking for leverage and they like gold. And so, from a financing standpoint, again, the way we do it is we put a budget together and then things that we want to drill. And then we say to ourselves, will the market support that kind of dollar amount raise? And if it's we think that it will, we go to a broker and work on a bought deal, or we also have relationships with private guys who will do a private equity deal. Typically, we like to raise flow-through money, but we're open to hard dollars at times to pay for things. We just haven't had to do the hard dollar raise because we've sold some dollar shares. But my goal has been the last few years is keep dilution down for investors. So we're probably running around 3%, maybe 4% at the most. And that's way below the average. So again, being a finance guy, I don't want to dilute my own ownership for anything we've got, but there is a lot of room for Fury to go. We only have about 151 million shares out there, and that's on the low end. So we've got a lot of optionality going forward to do things, and that's how I think about it.
Just wondering, just tell us a little bit more about the work that you're doing in the local communities and obviously why it's important in the development of Fury gold mines.
So, look, everything revolves around working with the Indigenous group, and it's for the most part all their land, and it pays to have good relationships for both sides. I think Fury does a particularly good job because we're a junior. Most of the concern comes when production comes. But as a junior, I went up with our senior geologist last year up to Val-d'Or, and we played in the golf tournament with the tally man and the chief. And at the dinner table later that night, I was sitting with the family of the tally man, and he leans over and he said, typically we don't see juniors up here like this. And I was like, why is that? And he goes, most of them wait until it's too late and they come up when they need it. And you guys are here before you need it, and it's recognized. And so we do charity gifts. We also have a lot of the indigenous local community working at the mine or the camp, the exploration camp. And we also participate in other types of events and charity things that really promote the benefit of the Indigenous crew. We also have Ecologo and Digby on our website that sort of evaluates this if people are looking at that. And we have Saga Williams is on our board, a woman, and she's not only an adjunct lawyer, but she's also a councilwoman in her local Indigenous group. So that's important. I don't think too many juniors have that.
With global uncertainty on the rise, obviously we can see that in things that happen in the world at the moment, how do you see gold's role in the broader financial ecosystem, and especially Obviously, gold is used as a hedge against inflation and market risk.
Well, I mean, I don't think it's hard for anybody to go to the grocery store and know that inflation's still here, and it's a lot. And I even look at my auto insurance is up 20% year over year. It's crazy. And so invariably, it's not a surprise to me considering how much money has been printed in the last decade. How could you not? And I used to go, there was a gentleman in Boston who was an elderly gentleman, and he used to tell a story. He used to look at gold, and he ran his own mutual fund company, and he used to actually run the Clinton Foundation. But he went to Yale, and he loves telling the story how when he went to Yale, his room and board was like 800, $1,800, and his grandson was at Yale a few years ago, and it was like 88,000 bucks, something crazy. And it's about money supply is what he was taught. And I think that's true. The money supply is going up in the world massively. And as much as they're producing, it can't keep up in the gold side. And then I also think you have this geopolitical stress on the global market with China. And, the comment from Putin when the U.S. weaponized the dollar against them was that now the cat's out of the bag and everybody's going to realize that's their modus operandi. They basically trying to force everybody economically to do what they want versus sending soldiers to die, which is not a popular thing. But anyway, the first thing China did was start dumping dollars. And what do you think they bought? Gold. And so did 32 other countries along with them. And you can go look it up, and there's flow trends globally, and all the buying is coming from the eastern countries of the world. And I think the North America, Europe's typically much further ahead than the U.S., but North America is just out to lunch. And they want to undermine the U.S. dollar for economic and other types of reasons. And I think they want to have their currency as the number one currency in the world. And the interesting part about gold, though, is it's the one currency that no one owns. It's here to stay as much as Bitcoin is up and down. I'm a Warren Buffett fan. I just don't see the value there. I think there's a lot of risk. And gold is, the physical sides of gold is really always been desired by humans, and I don't think it's going away anytime soon.
And lastly, I wonder if you can just give us an outlook for the next sort of 6 to 12 months for Fury Gold Mines and what you're looking to achieve.
Great. So we're hoping to score big in the next drilling program and having some good news out for everybody. I think we're poised that if that comes out, that would be very good for our stock. And then it would also give us an ability, because valuations are important in these companies if you want to go out and buy things or merge or do other kinds of transactional items. I think it's important. And so that could lead to some of that. And but what we want to do is we want to get focused on our drilling, which is the Éléonore South property. The anomaly there is as good a drill opportunity as at any junior right now, especially because of the location next to a big mine. And then we want to go back to our other property, 50 kilometers south, and we've got a huge. It's if you look at a map, the Éléonore resources in the bottom left side of the property, and out to the east, we've discovered another 16 anomalies. And we went to one of them last year and called Serendipity, and we had a new discovery. And then we want to go out and see what other possibilities are, because when we sit down with some of the majors, they're like, we like what you're doing with Eau Claire resource, and it's getting to the size that we're starting to get interested. But if you found new discoveries along this 30-kilometer trend that you own, that could be really interesting. And so we want to show some development there. And then we've been talking about going back up to Committee Bay in Nunavut it's it's very expensive to go up there to drill. But we have some business that we would like to circle back and finish. We had a big discovery outside the iron formation that we thought was where all the gold was, and it turns out we tapped into a shear zone below it, and we had by far our biggest hit in the whole property. At the time, it sent the stock up quite a bit, but if we can prove that there's more discovery on that shear zone, that could be a game changer for that property. And it's a big property. It's 300 kilometer greenstone belt. Most juniors do not own anything like that. And we got a camp up there. And so we'd like to go back up and finish some of that.
Great. Tim, appreciate your time. Thank you for sharing your journey. Thank you for telling us more about Fury Gold Mines, your exploration program that you're looking to explore this year, and tell us a little bit about your capital markets experience. And I'm sure our audience will grab some information and content from your talk. If our audience wants to reach out to you, if they've got any questions, how can they go about following yourself and Fury Gold Mines?
Well, we have a website called furygoldmines.com, and there's an access point too. They can reach out on the email there, but we put all our photos of what we're doing and exploration projects up on that website. It's pretty self-explanatory, and there's lots of YouTube video of discussions just like this online. So, my mother likes to critique them and tell me what I'm doing wrong, but everybody else, I'm sure, can jump on and do that as well.
Yeah, no, I'm sure you're fine. No, I really appreciate that. And our audience, we'll enclose those links in the show notes for easy access. So, Tim, thank you again.
Thank you, Rob.
Maybe you can come on again. Maybe we can speak a little bit about what we discussed initially in the introduction about the mentoring. It'd be good for you to come on and show us your expertise around that and what you've learned early in your career.
Sure, that'd be great.
No
Thanks,
worries.
Todd.
Thank you for listening. Hope you enjoyed the episode. As always, appreciate your continued support. Please keep sharing these episodes far and wide. Good episode to share. Tim obviously spoke about gold and what the value of gold is in society. And you don't have to be in the mining industry to own gold. It's something that everyone should be looking at. So please share these episodes far and wide. Thank you for listening. And until next time, happy mining.
Thank you for listening. Remember to reach out to Rob via the show notes and be sure to subscribe and leave a review. Until next time, happy mining, helping each other to improve the mining industry.